let's say people want to sell their bonds and they want to buy Bitcoin.
As long as the Fed keeps rates low, we can expect the 10-year rate to continue to climb as well, presenting institutional investors with some tough decisions once they do begin to take profits out of these markets.
The more we create savings in it, the more you might say, I'd rather have Bitcoin than the bond.
Do they retain their profits by purchasing bonds, or do they cash in on the promise of Bitcoin being the next global reserve currency of our data-connected future?
Personally, I'd rather have Bitcoin than a bond.
Self-destruct sequence activated. 3, 2, 1.
Is this your homework, Larry?
Just ask him about the car, man.
Is this yours, Larry? Is this your homework, Larry?
Is that your car out front?
Is this your homework, Larry?
We know it's his fucking homework. Where's the fucking money, you little brat?
Welcome back to the channel, everyone. Johnny here. I hope you're all having a wonderful week so far. Let's get right into today's episode. So a lot going on in these markets this week, and there's a lot of speculation surrounding the entire crypto market. Goldman Sachs now considers Bitcoin a, quote, investable asset after firmly stating publicly last year that they really didn't consider Bitcoin as such. They've joined the club of other financial institutions like JP Morgan that have changed their public view on Bitcoin after trying their best to convince the world otherwise. Now, following up on his tweet that triggered a lot of people in the community, Elon Musk is making some news yet again, announcing that he and Michael Saylor are potentially making some great strides in ensuring a green future for Bitcoin, getting the ball rolling on a Bitcoin mining council, a move that would definitely calm some of the criticism we've seen thrown at Bitcoin since really before 2017. Now, on to some news that I've honestly been waiting for. Legendary hedge fund manager Ray Dalio finally admits that he owns some Bitcoin in a recent interview with CoinDesk. Let's go ahead and take a look.
I think Bitcoin's greatest risk is its success. Because as it becomes more, right now, it's not such a big deal. And, you know, fighting it is more of a big deal. And that's it, because it's not that big a deal. As it becomes a bigger deal and more of a threat, let's say people want to sell their bonds and they want to buy Bitcoin. And they want to do that in a bigger way, like buying gold or something in a bigger way. And then there's more transaction. They lose control over that. And that's an existential risk. So yes, that's connected. The more we create savings in it, the more you might say, I'd rather have Bitcoin than the bond. Personally, I'd rather have Bitcoin than a bond. And then the more that happens, then it goes into Bitcoin and it doesn't go into credit, and then they lose control of it. So yeah, that's a risk.
Now, Dalio reiterated concerns that governments fearing competition from Bitcoin could crack down on the crypto space. However, he did point towards a potentially key factor in Bitcoin's global success, saying that China's renminbi is possibly on the rise and that the dollar may be waning. Now, he believes that a neutral crypto like Bitcoin could act like gold did in previous centuries and just shoot up. Now, the charts are really telling a similar story, but one thing really is made clear, that there's not really been a decision made and things could really go either way. Now, taking a look here at the gold spot price on the daily chart, we can see that gold has been doing pretty damn well since bottoming out around 1676 back in March of this year. It's up about 12% and right now sitting just over 1870. So honestly, I mean, gold has been doing well since really 2018, climbing up a full 80% over over the last 2.5, almost 3 years. Now, if we zoom out here to the weekly chart, gold is actually looking really bullish, sitting just above the neckline of this giant rounded bottom, a really bullish pattern with a measured move, putting gold all the way up towards $3,300, a potentially 97% bullish move. Let's go ahead and take a look at the Bitcoin gold chart. So Bitcoin USD. So if we take a look at this chart here, we get something that looks almost identical to the Bitcoin dollar chart. But if we actually flip this to the gold Bitcoin chart, then we can see something a little bit more useful. So if we zoom in here, we are on the weekly. We can see that gold's getting a pretty nice bounce here against Bitcoin, but really this comes after years, years of losing value versus Bitcoin. So Bitcoin's really been kicking gold's ass here. So, you know, this really kind of is just an oversold bounce, and you know, we're really looking at something similar to what we saw back in 2013 when gold did get a bounce against Bitcoin just before the second leg of that 2013 bull run, where gold really kind of just took off. But if we bring up the weekly EMAs here, we can see that gold versus Bitcoin is hitting some pretty hefty resistance here at the 21 weekly EMA. And then the next resistance level here would be right at the 55 weekly EMA for gold versus Bitcoin. So if we do see the gold spot price break out against Bitcoin and move past the 21 weekly EMA, then we'll be looking for it to kind of come up here right around the 55 weekly EMA. But we can really use these as really confirmations towards the price action that we're seeing out of Bitcoin versus the dollar. Let's take a look here at the Bitcoin chart. So Bitcoin briefly made it up towards the 40K price level and is attempting to yet again break across the 34 weekly EMA. The 21 weekly EMA is sitting all the way up here at $45.8 thousand, and the 34 is just above current price action. If price action cannot break back above this exponential moving average, then it's possible that we're going to see nothing more than an oversold bounce here, and this is just a bearish retest of the 40K price level before moving down to some lower prices. Now at this point, I'm really not convinced that this bearish price action is over, and while I do expect Bitcoin to push into six figures this year, a move down closer to say $22,000 is appearing more and more likely the longer Bitcoin stays under this $44,000 price level. Now, why $22,000? Well, if we take on anchored VWAP from the March low of right around, what was it, $38,000, then that puts us right here at this 618 fib retracement. And while this is purely speculative, if we reference this chart that I've mentioned in just about every video so far that calls the top of this Bitcoin bull run right around the $365,000 level, if we take a fib retracement from this price level all the way down to the March low of $3,850, that gives us a 618 retracement right here at $21.814 thousand. Now there is more confluence here. We do see some volume support with the VPVR right here, just under 20K actually. If it comes down any further, now this could indeed be the bounce, but I would like to see some more volume out of the bulls to really go ahead and push this price higher. But as long as we continue to get rejected at this 34 weekly EMA, then this $21.8 thousand price level is looking more and more likely. Now, should the price break down below this level, then we'll be looking to get some buy orders filled right here at the 233 weekly EMA on the low side, which has been pretty damn good at calling all of these capitulation sell-offs in the past. But if we do get the fill here at the $21.8 thousand level, then that will just add some excitement and potential confluence to the possibility that we could be looking at a $365,000 Bitcoin by the end of 2021, possibly Q1, maybe even Q2 of 2022. Now let's go ahead and take a look at some shorter term price action here. If we zoom into the 4-hour chart, Bitcoin is actually looking fairly bullish right now. We can see we did get a break across this support level, which is definitely a good sign for the bulls, but we do need to see them step in and really push price action above this 34 weekly EMA. If we take a look here at the 4-hour stochastic, 4-hour stochastic does not look bad. But we did just get a bearish cross, so we could be headed a bit to the downside here soon. We do have the CME settlement on Friday this week, so that could be a big contributor to whatever price action does here over these next couple of days. But right now we're looking at this falling, broadening wedge, giving us a measured move back into new all-time high territory, really just under or right at $70,000. However, if Bitcoin cannot break back across this 34 weekly EMA and across the 21 weekly EMA, then we are likely looking for a push back to the downside, down around this $21,800 level. However, things do look decent right now, so we could be getting that push we're looking for. And the first thing we are looking for here is one, a break across the 34 weekly EMA, just under 40K. And the second confirmation that we're looking for here would be a break and close above $45,576,000, at least on the 4-hour time frame. Now, if Bitcoin does get the bounce here and we are rejected at this 21 weekly EMA, then we'll have to wait and see if Bitcoin can catch support here on the 34 weekly EMA. And then there is a possibility that the bulls could step in and push the price back into new all-time highs. However, if we cannot hold support here after breaking across, then again, we'll be looking at a fill down here around the $21,800 level. And should we run into another capitulation style liquidity event, then we'll be looking to get our fills down here at the 233 weekly EMA, right around $12,400. That's all I got for you guys today. Thank you so much for dropping in. Thank you for sticking with me till the end. I definitely appreciate the love. Go ahead and follow me on Twitter, guys, at BitCapJohnny. It's popping up on the screen right now. Give me a bit of a follow. Don't forget to like. Don't forget to subscribe. Don't forget to ding that bell. Visit the website, 3candlecollective.com. Keep your eye on the DXY, and I'll see you guys in the next video.